Monday, November 10th. Let's level up. The probability of the Fed rate cut is 63.5, down a little from where it was before, but obviously more likely than not. VIX did have a pullback today. If you're bearish, put an alert over the high of day at 1882, so 1883 would trigger it. Bulls here for continued upside need to get price in the VIX back below 1724 to 1756. If they can do that, maybe they make the run to the 1623. As far as futures go, we rallied back to the breakdown point. Bulls here need to hold over 68.51 to 68.57.75. If not, we could see a liquidation break. We do now have two rich closes back to back at 68.28 and 67.08.75. In the Qs, very similar, but we're not over the apples to apples of the 68.51 in the ES, which would be 25,853. If there is a liquidation break, we could repair today's rich close to 25,588 quarter. There's also another rich close to repair down at 25,002. So still to be determined. We don't assume end ranges, so let's keep it super simple. The 200 MA 30-minute had been resistance on the way up. We can now assume it's support on the way down as long as it holds. Anything that's sustained below, more bearish. If we get below and then above, or hit it and then bounce, more bullish. As of this video, the 200 MA 30-minute is 67.94 half, and in the Qs, it's 25,482.75. As far as SPY goes, I had mentioned in the weekend video that we had the test back to the 50 MA. We actually overshot it and got back up above. The next key resistances would be the 20 MA, which was 674.61, and the 10 MA at 679.52. We also have some potential gap fill resistance at 683.34, which is really where this dump began on 11.4 when we gapped down from that 11.3, and that would be the gap fill to the 683.34, by the way. So what now? We are seeing a little pullback in the after hours, not making too much of it just yet. If you want, you could use the 10 MA as a stop at 679.52. The VWAP from today was 679.28, so that's as good a stop as any. If we were to lose the candle body low today at 677.25, I think that would be too much, and my guess is we would start testing back to the 673.95, 674.61 area, which was of course the 10-10 high and the 20 MA respectively. And then of course there's always the gap from today that might ultimately be filled to 670.97. Bulls, however, do have a downtrend break here, and we did test below the primary bigger trend and came back up above, and now we're above the mini channel that took us down to the trend line. As far as the Qs go, very similar. We tested the channel low, 50 MA, where I said we thought we would get down to, and we bounced. We actually undercut it a little, so no excuses for not getting filled on covering shorts down there. Now we're back up over the 20 MA, but a little below the 10 MA, so very simple. In between that range of the 20 MA at 616.57 and the 10 MA at 624.34, it's just neutral to bullish. Above the 10 MA, bullish. Below the 20 MA, bearish, probably for a check back to the 10-10 reference high at 613.18, and then after that, the gap fill at 609.74. If we do keep pumping, the 11.3 gap fill takes you to 632.08. Microsoft got to the range high and then bounced off the range low. I think if you want to use today's VWAP at 504.42 as a stop, that's fine. Targets on the upside, the first one would be the 50 MA at 513.86 and the 20 MA at 517.42. Apple still acting pretty well. They announced that they're basically ending the iPhone Air line, and they are going to focus on their better models, the entry-level iPhone 17 and the 17 Pro, which are selling better. No problem with that. I think that that was smart of them to kind of cut production sooner than later. The market took a little dip on that, but ultimately rebounded. I think bulls are okay, believe it or not, even to pullbacks to 260.10, which was the retest of the breakout. I do ultimately think that will get tested, but I don't know what the order of operations are here. We are currently riding the green channel high, and if there is an up move, if you want to do some kind of a call spread, target the earnings pop after hours high at 285. As far as NVIDIA goes, nice rebound off of Friday's low. Again, a look below and fail of the 50 MA. That has been the setup, the trade below and then back up above. We are now into 10 MA, and we are above the 10-10 reference high. I think you could use that as a stop. Anything below 195.62, if you just want to use 195, the whole card, that's fine. On the upside, if we were to make it to the yellow channel high, which I think we could respect now, it would be 203.74. Gold got a bit of a run today also. GLD is a little weaker than the GCs themselves. The GCs got about to the 50% fib, and GLD is just a little bit above the 38.2. Probably a good area to trim here. I would not let it get back below the 20 MA on you now at 375.54. The next upside resistances to trim into are 381.71, which is the 50% fib in GLD, and then the 61.8 at 386.81 into the start of the gap at 388.90. My guess is if we do test into the gap, you'll have a look in and fail. If the pullback is mild, the next test in, you could buy the dip. If it's a sharper pullback, just stay away for a while. I'm not convinced gold is off to the races, but it definitely is more bullish than bearish as long as it stays above the 20 MA. As far as the Bitcoin goes, this is stalling right at the resistance between 107,790 and 110,150. That area must clear. We are currently in the after hours testing the 10 MA, so that's also a must hold at 105,794. I'd feel better at least over the 20 MA at 108,162, but generally we need to see that 107,790 to 110,150 area clear to get bullish for still higher prices. And by still higher prices, I mean the 50 and 100 MA confluence at 112,834 to 113,664. TLT chopping around. It did fill the gap, the 10-9 gap, that is 89.18, and bounced. I see some resistance now if we get up to the 20 MA at 90.79, but generally we are still within an up channel here, so I wouldn't get too bearish just yet. CoreWeave getting smacked a little bit in the after hours. Maybe it retests the lows at the 84.40-ish area. 108.80 is roughly a key level. We're actually a little below there in the 97s. So yeah, we could retest the range low. I'd be liking it on a look below and fail at the 84.40. If we don't get that, just be a little bit careful. I don't usually like to be a buyer on day one, but if you're trading intraday, I think you could use the opening 5, 15, and 30-minute range as a reference. Generally speaking, markets rebounded quite a bit. If you haven't taken some gains off the table and you got caught long at the top, maybe a little bit overly long, good opportunity to sell some upside calls to generate some alpha, maybe sell near or at the money same week. And if you want to buy longer dated ones to push the position, get called out of the shares maybe, and then maybe lower your betas and play for still further upside, which you could ultimately even turn into a call spread into itself. I like doing that. If you want to put on some put spreads or put ratio plays here, protecting downside or playing for pullbacks that are buyable, I think that that's fine. Obviously, the government shutdown ending is a big positive here for the market, particularly ahead of holiday seasons. When you start seeing the flight delays, that's when politicians start paying more attention because their constituents start getting really super pissed. Overall, in the futures, I had said I thought we would get down to that 2 times range, likely bounce to the breakdown, and then come down to the 2.618. It played out pretty much exactly like that. So I am satisfied with the downside move, at least as of now. Yes, we could get some news. Maybe there's some bad economic data. Maybe the shutdown extends a little longer. There could be some type of a snag, or the Supreme Court rule against the tariffs. I think that could be a knee-jerk down to maybe repair some of those rich closes, but ultimately I think the dip gets bought there because I think the Trump administration has some backup plans to implement the tariffs maybe in different ways. We're very late in the year. It seems that fund managers are underperforming the benchmarks. I've heard something like 80% of the managers are. The fear level's down into the extreme fear here in the 21s, which is very low. The market did actually bottom in the 3 number, so there is definitely room for more fear, but we're really just off of all-time highs, and there's no euphoria here. So yes, I don't think the market is overbought. Like and follow for more.